This is Ask the Expert. I'm John Burgess, and our expert today is Richard Ogg, a member of the California Society of Enrolled Agents, also vice president of the North Bay chapter of the organization, and you have a tax practice here in Santa Rosa.
Yep.
Welcome.
Thank you.
In the housing market, we keep talking about short sales, but some people are involved in foreclosure. But how is that different?
Well, there are foreclosures, short sales, deed in lieu of, even abandonment, and in some respects those are different. When it comes to tax issues, they're really all the same. All of them represent debt relief, and all of them are potentially income that's taxable.
So explain why it's taxable. It just seems like you're already having a tough time. The IRS is kind of jabbing at you a little bit. So why is it even taxable?
Well, let's put it this way. If I give you money in a business transaction, but you have to give it back, that's not taxable income.
Right.
But if I give you money in a business transaction and you don't have to give it back, it is taxable income. So what's happened is I've given you money, you've got to give it back, but then we remove the obligation for you to give it back. Now it becomes taxable.
Is there any relief?
Well, there is some relief, particularly in the federal level, in terms of the foreclosure laws. In California, the law is there's a purchase money loan, and if you still have that original loan from when you bought the house, it's not considered income. There's no tax consequences. If you've refinanced, you don't have that help in California, but the federal foreclosure laws do give you relief from that for the amount of the original loan. On the other hand, if you have an equity debt, you've borrowed extra money against the house for the vacation or the car or wedding or whatever, there's no relief on that.
You know, you're looking at the forms, you're filling things out. We'll talk about getting help. It just sounds so complicated, is it?
For the most part, it is. In a real simple case, it's fairly straightforward, but it can be complicated, and most of them are. I mean, even the 1099-C they send you in the mail, the numbers on that are not necessarily the numbers that you even use. Some of the definitions for qualified things like that, that's pretty confusing as well. You know, and this works for credit cards, auto loans, not just houses. There are other provisions, but they're even more complicated to work through.
What's the best way for people to find help?
Best way is probably go to the website for the California Society of Enrolled Agents, www.csea.org, and there's a link right on that page, Find an EA. Click there, put in your zip code or city or whatever, and you'll find an enrolled agent.
Is there anything else we should know about?
When you contact those enrolled agents, ask them about their training. Have they been trained in the particular issues that you're dealing with? You want someone that really is prepared to handle what you're dealing with.
Fantastic. Good advice, Richard. Thanks very much. And again, to find out more, you can go to csea.org.